Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for December 5th, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 369. My name is David Kosmeter. You should be seeing my screen right now. I'm the creator of TimingResearch.com, and today I have arranged for Casey Stubbs and Leslie Jouflas and Dan Passarelli to join us as today's guests, and the option professor is back to moderate. So I'm going to go ahead and turn over to him.
Okay, great. Thanks, David. And we got a very hot report on the services number. So obviously that changed the landscape of how the market's traded after that. But we're going to get into a lot of information. We got great guests today. But before we get started, we're going to introduce everybody. So Casey, let's start out with you. Could you tell us a little bit about yourself and what's going on at your company?
Hey, thanks a lot. My name's Casey Stubbs, and I'm the host of the How to Trade It podcast. And you were on my show not too long ago, which was a lot of fun.
I recall.
And always talking trading on the podcast, trying to help traders get better.
Mm-hmm. Okay, great. And
I was just going to add here, the link to that podcast episode is still in the footer area of most of the Timing Research emails. So in case anyone hasn't seen that yet, you should be able to find it in any Timing Research email.
Thanks, David.
Yep. Yeah. And at the end of the broadcast, Casey can go into more detail on how people could keep in touch. Leslie, a little background on yourself and what's going on at your company.
Hi, yeah, well, I'm Leslie Jouflas. I'm a CMT, Chartered Market Technician, and that means I know a whole bunch about technical analysis. And my website is Trading Live Online, and I started this website in 2007 for the sole purpose of educating traders and helping them learn how to trade.
Excellent. And finally, Dan, a little background on yourself again and a little bit about the company.
Sure, sounds great. My name's Dan Passarelli, and I'm the founder of MarketTaker.com, and we are a leader in option trader education specifically. And we've been creating lots and lots of really great scans and tools to help basically make trading easier for option traders of all experience levels.
Okay. Now, at the end of the broadcast, everyone will get an opportunity to, again, mention how people can get a hold of them. I just was trying to figure out where we actually opened today on the S&P so that we could, I guess the opening today might have been about 40.31 or something like that. Is that what you guys are showing for today?
Yeah, I've got 40.45 3/4 on the futures, on the December futures.
So 40.45. Okay. All right. So Monday is the day we asked the question from 40.45. How do you feel the market will close by Friday? And, it's a pretty quiet week on news, but market volatility seems to be up. Let's start out with Dan. Excuse me, Casey. Where do you think we're going to be? Up, sideways? Where do you think?
Well, I primarily look at the S&P as my main market guide. So I think that maybe is what you were talking about. But right now we're at 4,006.
Right.
We've had a huge move over the last month up. And I think that we run into some pretty solid resistance on weekly and monthly time frames. So I'm going to say that at the end of the week, we're going to be below 4,000.
Okay. So you're down. And what's your confidence level on that? Over 50, 70? What do you think?
There's a lot of news and things coming out. So that is going to be dependent upon how things play out. So I'd say 60%. I'm 60% confident.
Yeah. More likely than not at what we know now.
Yeah.
Yeah, I'm with you. Leslie, what's your call from 40.45 until Friday?
Well, what I'm seeing right now is the S&P 500 futures has gotten up to what's becoming a longer term trend line going all the way back a year ago. And this is the fourth test of it right now. So above 4110, if it gets above 4110 by sometime this week, I'm going to say it'll be higher. I can just give you a range. And if we break, there was a really long daily candle just a couple of days ago. And if we break the lows of that, about 39.50-ish, then lower. So that's the range I'm looking at to kind of determine. But right now it looks like we're doing a little bit of a correction from this up move. But again, 41.10 is going to be the upside level.
I have a number coming in around where we are right now, which is very similar to the low we saw last week. But it whether it holds or not is kind of tenuous at this point, huh?
Yeah, I see that low. It's just above 4,000. Is that what
Yeah.
you're looking at?
I got a 12 SMA on my 1 year that comes in around that price, and it did bounce quite nicely off of that price on Friday. But revisiting it 24 hours later might not be the best thing. Huh?
Well, there's a candle pattern that was formed with that candle that you're looking at, Jim, and the low of that. It's almost a hanging man type of a pattern.
Right.
And so generally, if the low of that type of pattern breaks, that's generally a bearish signal.
Right.
However, Japanese candlesticks don't give any type of price target, so you have to use something else to kind of determine that.
I'm with you. Hey, Dan, what are you thinking from 40.45 to the end of the week? Up, down, sideways, or what do you think?
Well, I guess I have to be the negative Nelly here. Sounds like I might be a little bit more bearish than my counterparts. But I think that we got a pretty big overreaction. Oh, what was that? The middle of next week when Powell
Last week,
when he was, basically implied that there would probably be a 50 basis point hike as opposed to 75, which, there was already like a 75% chance of that priced in when he said that. And I just found it to be such a strange overreaction because nothing really that fundamentally changed. So today sitting here back below the 200-day moving average. And I think if we get to that 20-day moving average, we could see a little follow through there. So, I'm kind of looking at maybe 390 or so, or 3,900 or so.
Right. And that VIX that we watch, because we're option guys, that being under 20 and the news changing a little bit on the wages. And if you get a CPI report that has an 8 print on it or something like that, the scenery could change pretty good,
Yeah, it was interesting. If we're not mistaken, I think we were talking about that last week. And just like clockwork, VIX gets down under 20, and what do you know, the market ends up heading down. I was talking about that in one of our classes here with our students, and why is that?
And the short-term yields did pop pretty good because I just bought some T-bills and they were 20 basis points higher than yesterday. So I can tell you on a firsthand basis that short-term yields definitely popped up after that ISM services number was way higher than estimates. So. All right. Well, let's turn to Casey. And Casey, what type of fundamental or technical things are you looking for in the somewhat near future that might guide our direction?
Well, right now I've been looking at the weekly resistance on the S&P 500, and it pushed up against it pretty good. And now we're headed lower. And I really like what Bob had to say about the overreaction. Because I was, I'm sure along with everyone else, was watching the price action during that news, and I was pretty surprised that it went up that high. And I think that it was really priming people for a great selling opportunity. And so, with that being said, I think that if we can see that. If we just look at that candle that's currently on the chart right now, that big bullish candle right there, that is, if we go to the bottom of that, can't really tell exactly where the price is, but if price will go below that, I'm thinking that we could be, that could be a pretty key reversal, right? Around the 39.40 type area below that candle. I think that's a signal that we could have a reversal and that price could move lower. And if it continues, we could get down to 3,500 at some point.
Okay. All right. And with regards to yourself, Leslie, what kind of technicals and fundamentals are you kind of looking at right now?
Well, but for technicals, I don't really look at fundamentals.
Okay.
I'm really a technical trader.
Okay.
But technically, I'm seeing more bearish patterns forming on the longer term charts than I am bullish. I don't have a bullish pattern right now. The price would have to do some type of deeper retracement in order to form a bullish pattern at this point, or get above that 4110 level. Of course, I'm talking about the S&P 500. And if we use just a simple trend line from about middle of October, where those lows were made, and we just extend that up, that's intersecting with where some of these lows towards the end of November were made. So I agree. I think if that price level 39.50-ish, which is going to be right about where the bottom of that long candle that Casey was just talking about, that would break that trend line. And then there's some fib levels down there for support that would coincide with Dan's analysis. A 382 retracement would be around 38.77 at 50%, which is really well watched, just above 3,800. A stronger move would probably bring it to the 618, about 37.35.
Mm-hmm. Okay. So that's pretty much what you're seeing as far as the technicals.
Yeah, right now, though, it's, looking at the last couple of days of bars, the market is getting ready for a large move. I will say that it's getting ready for more of an explosive move. Whether this move is going to be up or down, I'm just using some of these simple techniques to let me know which direction, and then I'm
Yeah.
happy to go that way. I don't need to.
And
For
I
me,
think,
don't.
yeah,
don't-
we agree on one number, which is 4,100 on the S&P, because I think a week or so ago, I came out with a quick alert that there was a gap up there at 4,100. The VIX was under 20, and the stage was set that this thing could roll over from that level, and it certainly has. So I think that 4,100 level, in my view, is the end of the story. But if it got above there, you can't fight the tape. And so, because this VIX down at 20, it's either telling you that, there is no big down move, no big volatile move to the downside, and we could go up, or it is obviously telling you, like it did 4 times this year, that it's going to roll over big time.
Right.
So it's very critical. I think it's very critical area. There's a couple of other markets I'm going to bring up that also look like they're in critical area. Dan, again, some more technicals and fundamentals from you, or whatever you're looking at it's going to give you some motivation coming up.
Yeah, sure. A little of both. I mean, sitting here between, for the moment, between the 200-day and 50-day moving average, those can both act as breakout periods. And, just agreeing with Leslie and actually you said as well, you can't fight the tape. And I think if we do get a breakout to the upside, especially since we closed above the 200-day moving average prior to today, 3 days in a row, we could get some movement to the upside, but if not, if not the downside. And like a whole part of that is I like to marry my analysis technically to just, some common macroeconomic fundamentals, just some common sense macroeconomic fundamentals. And, the unemployment situation and the little bit of news that we got last night, kind of like I referenced before, was not really a big major game changer. So, I wouldn't be surprised to see a big move in either direction.
Okay, I'm going to switch to a couple of markets that I've noticed. We already talked about one, the S&P, which had a little bit of a wall at 4,100, which so far has proved to be a very big resistance zone. So if it got above that, obviously that would be a big deal. A couple of other big deals are in the small caps, IWM. Could we put that chart up? And I'd like to ask you guys to comment on that, because I had a big resistance zone at 190 on the on the IWM, which is small caps, which everyone is touting as the place to be because they're not exposed to the dollar problems that was going on and other factors, lower valuations. Casey, do you have a comment on these small caps? Do you think they might have tapped out at 190, or what do you think?
Well, this is a really nice chart because when David was zoomed up on it, you could really see that we're actually in a very tight range, and it's right in between 190 and 180. And the moving average is the 50-period moving average is moving up slightly, but really the 200's going sideways. So when I look at this to me is a range trade. So we have a little bit of a double top right off of 190. It hit there twice, went down, but then on the other side we have double bottom off of 180. It hit the bottom twice and went up. So going forward, if we break out of that range, and as you have said, you don't want to go against what the price is doing, don't fight it. So I'm just going to be observing that channel. And if we get outside of that range, if it drops down, I'm going to be looking at price moving, continuing lower, possibly down to 164 again. And then if it breaks higher, look for price to continue moving up.
Yeah. I guess a good CPI number that came out in the 6s or something, Lord knows where they'd get that number from, the way the world is running. But if it came out like that, that could be an instigator to turn this whole game back to the upside. But, we all go out to eat and we go to the stores and everything. And, it seems like people are going pretty nuts with the spending still. But, we'll have to see how things pan out. Do you have a comment, Leslie, on this as far as
I do. In fact, could I share a chart real quick with IWM and show you what I'm looking at?
The secret sauce. Let's see it.
Okay, let me know if I press the right buttons. That's always the first step.
No, that looks like there's a chart up there.
Do we see a chart? Yep. Great.
Yep.
Okay.
Yeah.
Okay. Awesome. Okay. So this is IWM, and this is one that I followed. Here's just a sideways range that had been following. False move to the upside.
Very false.
Downside.
Yeah.
Very false. This is a ABCD pattern that all it did was retrace up to retest that area. And here, this is what I'm seeing on this. A couple of things that I'll point out. What this is just a parallel trend line channel that's forming right here. And so these highs right here, these are the important highs. And these would probably correspond if the S&P moved up and this moved up and broke at the same time, then I would be looking for a higher move. Right now, this is looking bearish to me. I'm going to draw just a little trend line in right here. I'm just going to take this low and draw it across these lows here. So this is close to breaking this trend line. I think this low right here, like Casey just said, this 180 area. But one thing that concerns me with this, and you'd have to see this happen in order for this to really turn bullish again, this is the RSI down here. I use ranges with RSI rather than overbought and oversold. And so this rally to the upside, the RSI was not able to exceed this old peak here, which is telling you that there is not as much underlying strength to this as what may have appeared here. In order for this to really turn bullish again on any rally to the upside, this RSI has got to exceed these peaks. And this is the resistance line with this green line. You can see MACD, this is MACD histogram down here. It's just simply going sideways. This is telling us that this market is coiling up and it's getting ready for a larger move. But we have excellent price points to watch, either these highs here, or we'll just use this little low right here. So break of this trend line, you got to wait for some confirmation, make sure it stays there. Using intraday breaks of trend lines can be super, super tricky. So daily is probably going to be better in this case.
Okay, Dan, might as well leave that up there so we have it right there. Dan, I just had a couple of questions. How do you feel about this IWM? And would you consider credit call spreads above 190?
At this point with the implied volatility looking a little weak really, because the historical is at 30 and, going out to like the 11-day options. I mean, you'd be selling the 190 strike calls at like 25.7. So you'd be putting it on for a little bit of a negative edge. And, as much as like that is just a solid resistance level at 190, even going back for a year or so. It was a big pivot point, whether support or resistance. So I feel like that is pretty likely to hold, but we have the 20-day moving average just trending up there, like getting ready to cross that 200-day moving average. And if it does, I would just be afraid that we could get some good follow through to the upside. So as much as I am a credit spread lover, always trying to find an excuse to trade them, I don't know. I would be a little nervous.
Well, what you're saying, there's not enough money in it to play the game.
Yeah. That's it. That's exactly it. Yep.
We don't play for free. All right. So anyway, now I'm going to turn to gold, and gold in my view was right up against a major traffic jam of all these wonderful averages that I follow, right around 1800, 1810 ballpark area. And it has definitely rolled over today. Let's put up the gold price and see, and we'll look at GDX and get some opinion on did gold just have its bear market rally and basically it's going to go back down, or is this a pullback and we're going to go nuts on the upside? What do you think? And we'll start out with Casey.
Thanks. So the one big thing on gold that I've been watching is that it hit a really big bottom at 1619.
Oh yeah.
There was a triple bottom there, and then when it broke out, it was pretty strong. And so I've been bullish on it. Right now, it's obviously pulling back, but I'm probably looking for it to come back down around 1720, and then looking for some more price action to indicate another bullish move up. Now, if I'm wrong, obviously I would be wrong on that, and we can't always get them right. The other thing that has got me very interested in a bullish move is just the fact that you can see it broke the 200 period moving average. And, if you drew a trend line on that downward move on the daily, really strong trend line break. And so right now we're above the 50 period moving average. So until it gets back below the 50 and until it gets below that structure that has started to form at 1720, if you look at 1720, there's a support level there, and also, or it's a resistance point, but it was resistance and now it's support 1720. So as long as it's above that, I'm looking to buy on pullbacks.
Sure. My feeling is I want it to close above 1825, 1850, because that opens the window to all those lovely prices up above. And if it can't do that, then you can't get to those lovely prices up above, right?
Exactly.
So anyway, how do you feel about it, Leslie?
I've been bullish on gold since back about mid to late October, and have been doing some chart work on it, and did some calls on it in my weekly market setups, and I think it's looking for a pullback here. Agree with that, and I do feel that there's some more upside in it to come, but I think we just have to watch how deep a pullback comes on this.
So you feel ultimately we will blow out the 1800, 1850 level, and we'll see some of those higher neighborhoods next year?
If it gets just a healthy little correction here and then moves back up, I think that's going to be confirming that there's a new trend to the upside.
Yeah. And again, inflation is still sticking around, and the dollar has kind of peaked at 115. So, and if the Fed blinks, that could be what gold wants to hear. And after the 2000 crash of .com, gold bottomed and then had a very nice run for about 8 years between 2003 and 2012. So if we're entering that kind of phase, there could be quite a future to gold, huh?
Possibly, but that has a little work to do to prove, I think, to prove that. But right now we're also in a seasonal bullish period for gold into December.
end of the calendar year, maybe even
Mhm.
beginning of the new year.
Yeah.
Sometimes gold makes its biggest moves.
Right.
Yeah. Well, how do you feel about it, Dan?
You know, there's a couple of things. Do you mind if I share my screen real quick?
No, sure. Please do.
Let's see here.
Because I think this is big stuff because like I say, there are some reasons why gold could be a fabulous investment, and the mining shares that I've been involved in the last 6 months certainly have been good ones. But,
Mhm.
you know, taking something off the table at 1800 doesn't seem to be the worst idea.
You're seeing my Thinkorswim chart, I think, right?
Yep.
Yeah, cool.
Right there.
So there's this pattern that we use, and when a stock is pulling back and then we get like 3 or more up-day green candles in a row and then like a little mini pullback, we call this a red knockout.
Now you're looking at Barrick Gold here. Did you want to put the actual price of gold up there? Because I have I get confused. Sometimes I'll put up gold and that Barrick comes up.
Yeah.
And I know you were suffering from the same ailment, so I thought I'd give you an idea on that.
Yeah. How about GDX? Oh,
yeah,
see,
that's a gold miners conglomerate, so that's not a bad thing either. Because I think that hit some stuff that's similar to the 1800 price.
So you know, we don't have an actual technical red knockout here, but we do have these, you know, following the down move, crossing up through some moving averages, 3 green candles, a little mini pullback. And it's very often you get some follow through when you see a pattern set up like this. So I think, you know, I think we have a pretty reasonable chance of running a bit higher. And, you know, to play that, I look at the historical volatility relative to where the options are priced on this. And even kind of discounting like these couple of big updates here and sort of mentally bringing down the historical volatility a bit, the implied is just so darn cheap. And so you can go out and buy like a 25-day to take you right through the end of the year too. You know, 25-day options at like a $40 or 40% volatility. You can buy them for about $1.05. The stock would just have to get to 30 to make those work, and there's plenty of room up to the upside with no real resistance.
Okay, so there's in your view, and then, of course, the gold stocks don't run 1-for-1 with the metal. I mean, if the metals, if the gold prices just were stable, some of these companies could be making money and do quite well. So they're not exactly married at the hip all the time.
Yeah, exactly. Right.
Yeah. And silver, I think, is, you know, in the same ballpark as far as, you know, it's just an accelerant. In other words, if the gold goes up, you know, silver tends to go up more, down, the same story, you know, because it's a little bit of a thinner market. But
Can I show you a pattern? That was great, Dan. Thank you. I really like seeing you walk through that. But I when I was watching it, there's another pattern that is going to show a really good support area for a pullback. So if you don't mind, I'll just see if I can get the right buttons on again.
I was happy we showed the gold shares because I did want to touch on that. Yeah, because most people will buy the gold shares rather than coins.
Yeah, so this is GDX. So here was the inverse head and shoulder pattern right here. And so using this as the neckline here, here's the breakout. So it to stay bullish, you want to see it just basically stay above where this the neckline is. So you're just a bit above 25 on that. There was a bit of a gap right here that filled. If it got below this, then I would really be monitoring what type of bars you're seeing coming down after if it got below this low. But I think probably anywhere, you know, retracement back down around this level, or even just a nice little retest of this may offer another buying opportunity. Back here in some of the price history, you can see these were support that was broken. This high here was getting back up into this big clustering and resistance. So it doesn't seem unusual at all that it's getting a bit of a pullback here. But I would watch for a nice retracement pattern on this.
And I see 2 gaps around 34 and 37 that are calling us. Please come and fill us.
Use right here. Let me use my
that
gap
could be
circle.
a longer term, but listen, you know, longer
Here's
term
my
isn't bad. That's 20% up from here. Nothing wrong with 20%.
Nothing at all. Nope, not at all. So
Yeah.
yeah, and those are good areas. As you can see back here where this sideways pattern formed, you know, a retest back into there, that'd be like a magnet back up into this area if it were able to retrace and then get back above that high there. Those would definitely be the areas I'd be watching.
One of the listeners was asking about silver. Why don't we throw it up there just to placate that?
Would you, I can, yeah,
Can you,
want
can
me
you
to
put,
put it
can you
up?
just
Yeah,
put, yeah,
you bet.
just put your silver up there.
Okay.
It's been a little stronger than gold, as it normally, you know, goes both ways faster.
Yeah, it just, whoops, charts everywhere.
This has a little bit of a commercial use with those electric vehicles too, right? I
There we
think
go.
from the limited knowledge I have on batteries.
Yeah, so silver, sorry, this is, I hope this doesn't make your eyes cross too much looking at all the.
You got a lot of
lines on
data
there.
up there. You got a lot of numbers.
Yes,
there.
yeah, well,
I
this,
think
yeah.
Fibonacci would be confused with all that up there.
Well, this was a bearish sell pattern here, and it got
Gotcha.
to move all the way down, and then it formed this bullish pattern, very similar to what we just looked at on GDX, and it's been a little bit behind. It hasn't been quite as strong, but you know, the last few days has been starting to catch up. So same principle on this, you know, I think a pullback, a nice retracement pattern, and I think that'd be a buy on that.
Be great if they could fill that gap and you pick it up at 17 and then it goes back up, huh?
That would be great. Yeah.
Yeah, that
would
wouldn't be,
take
that would be a nice Christmas present.
Well, we'll take it. We'll put the stocking out.
The other thing that, you know, that was of interest to this listener was the dollar. So let's put up the DXY and, you know, the stuff that I work at, you know, when it hit 115 and the moving averages are down at 104, I mean, I don't need a roadmap to tell me that it's, you know, going to have a pullback at some point simply because it's so extended off its moving averages. But now that that's done, are we in an area of 100 to 104 or something like that where, you know, people are getting a little too bearish on the dollar?
If somebody else wants to.
Oh yeah,
Go
let's
ahead,
start.
but
Let's start
here's
with we'll start with Casey on this. We'll go around the horn. Casey, what's your story on the dollar?
All right. So is that a dollar chart that we're looking at right there?
Dollar index. So
This- yeah.
Okay.
and it's
Yeah.
mostly euro against it. Euro and yen are the two.
So
big,
if we look at that, that's pretty significant drop there that we've had from, I mean, it was really screaming up. And so right now, that key, it broke out of that key trend channel, right? So if you look at the trend lines that that you could draw from there, and it's really broken that channel. So the way that I do that is once the structure changes and you get a very clear break like you did, then I'm looking now for pullbacks, right? So we got a really nice pullback initially, which would have been an opportunity for a sell trade. But right now we're screaming down. It is starting to get lower on the RSI, and we're hitting into some support levels. So we might slow down here a little bit. But at this point, I'm saying that we've got a new trend developed, and I'm going to be looking for selling any kind of pullback into resistance areas, anywhere into the 106.50, 107 type areas. And when I look for a pullback, I'm looking for a pullback plus a reversal pattern, candlestick pattern, in addition to the pullback.
So yeah, I love that 106.50 number because if it started trading back above that, you could build the case that the 104 pullback is done. So I think that number 106.50 is a big number for you, right?
Yeah, definitely. And you know,
so
consolidation is a big deal. So we like to see consolidation, and then when it decides to make its move, that you just follow right along.
Yeah. It's been pretty wild. It kind of went from overbought up at 115 down to 104, a little bit oversold. So it's kind of on both sides of extremes now a little bit. You know?
Right. And this really does play into the gold and the silver trades as well.
Yeah.
So when this starts to get weakened, you want to start looking over it at maybe moving some of your money into gold.
And we used to have this big yield advantage, but now the rest of the world has hiked their rates. So obviously that yield advantage that we had where we were up at 3 and 4 or whatever we were, and everyone else is at 1 or 2, you know, even Europe actually raised rates and they're supposed to do it again. So that interest rate advantage kind of went out the window. Leslie, what are you thinking on the US dollar?
Well, I had a sell on this up in this area, and if you look here, you can see the RSI, and you can see how it peaked here with this peak here. But once this is what I'm talking about with the ranges. So you can see how as it was bullish, it was holding this range here on the RSI. Every time it came back, it kind of was in this area. It would pop back up under the highs. But here, once we got up into these highs, you could really start to see it start to roll over right here on this retracement to the upside. The RSI was just showing weakness. And once it broke this support line here, it was going to be pretty much all over for this. This is called an ABCD. This is a buy pattern, but we can use this as a reversal pattern in conjunction with that RSI. And once they got below that level right there, it is gone. And the euro at the same time conversely had bullish patterns on it. So it was pretty strong sell signals up there. And I totally agree. This is a new downtrend in the dollar. This is not, trying to catch a falling knife scenario until the market proves itself again to the upside. The RSI and corrections to the upside, it might get back up here. It might poke up, and it tends to retest, just like support resistance. It might come back up and retest right around these peaks here. And if it's forming a nice retracement sell pattern, that would make a nice short setup.
Okay. All right. And Dan, what are you seeing on the dollar?
Yeah, just kind of agreeing with Casey and Leslie from a technical standpoint. But, hey, basically, I hope that everybody did all their European traveling, over the summer, because I don't think we're getting back up to the levels that we saw back in August.
I agree. Yeah.
Yeah. I mean, it's an interest rate play, right? It's our interest rates versus the interest rates in other countries. And, we started moving first, and that benefited the dollar for a long time. And now everybody is playing catch up, and they have to be, and we're looking at slowing. So, the fundamentals are there for further bearish movement as well.
Mm-hmm. All right, let's switch to a couple of other things that are in the news here. One is oil. Now, crude oil, in our view, up there at 94 area, had a lot of resistance and has certainly given it up. And today we've seen it reverse to the downside. They say that the inventories are being drawn down, and the SPR is going to be stopping a bit. So and China's reopening. So, you would think that energy prices would be doing quite well, but that's not exactly the case. So let's take a look at crude oil, and then maybe we look at XLE.
Okay, I've got an Excel. I don't know if you want me to continue.
Yeah, sure. XLE.
Okay, yeah,
which is basically Chevron and Exxon, right?
I put a sell out on this back here, and then
Mm-hmm.
I saw this. I thought, it might have been a bit early on this, but you basically double top test up here with what's called an ABCD sell pattern. And then after, a little bit more data filled in, you could clearly see a descending triangle form with this section. So I've just got a measured move. It appears, it hasn't done it yet, but it appears, so I don't want to jump the gun, that it may break this here. And if that's the case, it gives it a target down around that 80-ish level, and be close to that 6.1, 6.18. So it's still looking, the RSI is turning bearish on it. It looks like more downside to me.
Sure. How do you feel, Casey?
Well, the way that it breaks out of that triangle is going to be really important. So right now it is pressing the bottom. And so if it breaks out of the triangle, that definitely is going to be some selling pressure. However, if it holds and breaks out to the upside, we could go back up to high levels. And
the general thought pattern is that we're in a very choppy, dicey period between now and the first quarter of this year. But by the time the spring hits, the other stuff is going to hit to the fan, which is the demand is going to be quite strong. These reserves are going to be low, and the dynamic of those two is going to send us back towards 100, 120. That's the overall theme I'm hearing. But of course, we're not living in next spring. We're living right now. So
right. And that's great to look ahead like that and to
Yeah.
think about potential indicators and drivers that could move the price
Yeah.
up. And I've been very curious as to, we see the price moving down on the charts, and yet we don't really see fuel prices coming down at all.
Right, right. And Leslie, you gave us your idea on this. Let's turn to Dan and get a little energy call out of him.
Yeah, so it's pretty big red candle today. And I'm looking at this and I'm looking at it from a pure volatility standpoint. And you can go out about 25 days and buy straddles at a fair value from a volatility standpoint. You can pick it up, the options that expire on December 30th, so the end of the year, through, get into a good part of the winter. And you can buy them for $6. So when we had a move today of just $2.37, I mean, that's 3 times this 1 day move, and we get to hold it until December 30th. So, looking at it from a pullback that's, technically, I think we can all visualize a pullback technically, especially if we break a little lower from here, this like 87.5 level. But, if some of the fundamentals creep in and, we get a squeeze on energy, or we get a really, really cold winter, or there's other stuff with Ukraine going on, boy, I could easily imagine a breakout to the upside. So I'm kind of looking at this straddle here.
Okay, yeah, that might make some sense because you can build a case we're going to $65 because I've got some long-term moving averages on my long-term graph standing around $65, and you can also build a very good case if we're going back to 100. So in that kind of a scenario, certainly the straddle is something to at least consider, right?
Mm-hmm. Mm-hmm.
Yeah. All right. Now, there's a couple of energy stocks I just want to throw up there because European energy stocks supposedly are lower valuated than ours. And they are in a situation that maybe Leslie can throw this up on your chart.
Yeah, you bet.
Yeah, there's 2 of them. And the guy I was listening to made a very good case for it. And he was pretty common sense about it. One is British Petroleum, BP. Supposedly they're much further down the road to that carbon neutrally stuff and all that. And also, like I say, their valuations seem to be a little bit better, and they're paying out good cash flow too. So BP is one.
Oh, hang on just
European.
a sec.
Yeah.
Oh, there it is.
Okay.
Okay, hang on just a
Okay.
second. You keep talking, Jim. Keep
Oh,
talking.
yeah. Okay. And the second one's going to be Royal Dutch Shell. So we all heard of Shell Oil, and I'm sure we've also heard of British Petroleum. And those, I think, are 2 of the main ones over there in Europe. I'm sure there's
Oh.
others. You could look them up
Okay.
for yourself, but supposedly the values there seem to be better to people. And of course, Europe was having their problems here just until recently, just like China was. So if there's a turn in the action in Europe, a turn in the action in the overseas markets, this fits that theme as well of putting some of your dough overseas, right? So do we see some kind of a trend there or some kind of a...
Yeah, I do. I see that this could be a reversal pattern on here. This is what's called a butterfly reversal pattern.
Okay.
And this is where, using the previous swing high right here down to the low, this starts the A, the B, the C, and D. And generally, when the D extends above that previous X, that's what creates the butterfly pattern. This is the pattern that showed up a year ago on the indexes, the S&P 500. It does not always get as powerful of a move as we saw on the indexes this last year, but they can get very large moves. So in this particular case, this high right here, the 36.25, that is like the that's the place for stops. It looks as though it's already started to the downside, pretty bearish bars up here. You had a
Yep.
Harami pattern here, almost an engulfing pattern, gap down. So yeah, I think the close below this low here, more downside, a close above here, more upside. And that sort of ties into what we were just looking on XLE. And saying, above that level, above the descending trend line, price gets above that, higher, probably up towards 100. So it's the same thing here. This level and this level, down from here, up from here.
I guess all energy stocks are going to have trouble if we go to $65 a barrel, and they'll all do quite well if we go to 100 and 120, probably, right? But these things don't seem to have made quite the move as the U.S. ones. I think that's what the point the guy was saying is just that Shell, SHEL, and this one, BP, they seem to have a little better valuations, and their circumstances aren't too bad. And again, it feeds into that idea of some people are now buying Europe and they're buying overseas markets. Speaking of, let's look at a little China here. I mean, come on, and I'll throw one of the ones that I like out there too. But let's look at KWeb, because do
you want to put that up, Jim?
Yeah. Or no, I'm just saying we have yours up there. You might as well put that up there, and then I'll ask Casey how he feels about it, and
Okay, is that I'm sorry.
Yeah, KWEB.
Thank you.
Yeah, that's the consortium of the tech stocks over there, which have been obviously hammered over the last couple of years.
Oh, okay.
Which means if there's a real turn, maybe there's some value there. And then FXI is your larger caps over there.
Okay.
KWEB. And then, yeah, there's some other special situations kind of going on there. I'm just wondering how NEO's doing and other stuff like that. All the ones that, people threw out because it looked like they were never going to come out of COVID.
Well, thanks for putting the chart up, Leslie. Very nice.
Yeah, you're welcome.
But yeah, when I'm looking at this, a couple things that I noticed, and I know you don't have an RSI on it, but I was looking at it on a weekly chart, and the RSI just broke above 50 on a weekly. It also had a really nice kind of a break and fake, and then continue on in the direction. And so I'm thinking that this could be an extended move to the upside, and I would probably start targeting it around 40. I think it could get up to 40 just based off of the current price action that I'm seeing. You broke a trend line, broke a couple moving averages, really showing some bullish momentum, and I think that there's some room to move on this one.
Yeah, so China does look pretty good. One quick one, DIY. That's something that I was fooling around with when it was underneath $2. It's a ride sharing, kind of like the Uber of China. And my theory was that when they are let out of their apartments, there's got to be somebody who needs a ride, right? So
DIY?
DIY.
Sounds like a song.
Yeah. Hey, it's been a song for me. You'll see in a minute here.
Yeah, the symbol we just looked at, yeah, Casey, I agree with you on that. That had a bullish butterfly buy pattern at the bottom, and it's coming off of that. It looks bullish to me too.
And Leslie, when I saw your pattern on the BP, when you see a pattern like that, how far do you typically set your targets?
If you don't mind, I'll take just a quick minute and I'll show you. This will be really quick. So let's say we do this one here. There's the buy pattern here. So this is a great kind of pattern for doing to scaling out of the position. So you can use like Fibonacci retracement levels. To do like a one-part exit. Generally, see how I just use this high to low. For some of the larger targets, you can be, and of course you're monitoring the price, as it's moving, but you can be using like a 127, really strong moves up to like the 1618. So you can incorporate the fib levels for that, or you can use some trend following methods as well, moving averages and such with it.
Yeah, and also over there, the gaming stocks have been I've been
Okay.
very keen on those because, Las Vegas Sands went down to like $30. And, when they reopen, they're definitely going to gamble. So obviously that's already gone from 30 to 50, which was another great idea. And this is the ride sharing thing. I mean, at $1.50, what are you going to lose? $1.50. And does 6 billion people need a ride when they come out of their apartment? Somebody's got to need a ride, right?
Yeah, no kidding. Yeah. Oh, interesting. Yeah.
Anyway, I want to make sure you guys have plenty of time to talk about it, but there's one last thing that somebody was bringing up, and it's probably the last subject we should talk about. You know what the subject is? Bitcoin. So this guy wanted to talk about Bitcoin, BIT, or you can put up those proxies that I look at, which is GBTC and ETHE,
Yeah.
which is what more people might be trading. And so what does GBTC and ETHE look like in this world of Sam Brinkenbach or whatever his name is? Brinken jail, whatever.
But they don't look bullish. We'll just start with that. I think this has got to be one of the most speculative markets in history, and it's going to stay speculative only until some types of regulations are put into it. And it's sort of, but I don't have a really long-term chart up. I can squish it up a little bit more, but if you go back in the history of Bitcoin, there's still a lot more downside to go, it looks to me on. So it's sort of at a quiet phase right now. These bounces are pretty small, has some big sell patterns. The sentiment up around these highs was, I mean, we could be selling tulip bulbs for the prices that.
No, they said it was a 7 million% run. That's a pretty big run. 7 million% from the low to the high.
It needs to rest.
Yeah, that's a big move for sure.
How about Ethereum? I liked Ethereum because there's more applications, I thought, but
I'm
no expert at crypto.
It's a little bit stronger than the GBTC, not by a lot, but you can see even on this chart that it's still holding this support level down here. When it did this little consolidation here, it had a little bit of a stronger move to the upside. But yeah, you're right, more applications on this one. But I don't see anything tradable right now for me.
Yeah. Like I say, if you just want to buy it for the sake of it's, we hope it doesn't go to zero. So you throw your hat in the ring and you forget about it and hope that one day it turns up. That's not a bad thing to do on some things. I did that with Freeport McMoran when it got under $10 a share. It's not going to go to zero because we need copper. And at some point we're going to need it. And these guys probably are going to get squeezed. And the stock went from like 5 or 10 all the way up to 50. Now it's back down in the 40s, but the bottom line is that, if this thing is really going to be around and it's going to be an ongoing concern, when you pick up stuff at $5, you can't go more than zero. So it's almost like a long-term option on it,
Yeah, you're gonna probably love it at 2.
Yeah. Well, no, like I say, you might hold on to this. Hey, listen, if this thing goes off to like if Freeport McMoran went out of business, you would have lost the $5 or $10 that you put in. That's the risk. If they don't go out of business, Tom, Dick, and Harry has already sold out, and the circumstances that you're buying into now certainly are not bright ones. So if blockchain is really going to work and they're really going to use this stuff, then there is a future to it. But if these things are going to be obsolete, then obviously you're going to throw this money down the toilet. But
again, the thing you got to remember about something like this is that there's clear tradable patterns, right? And there's clear support and resistance levels. And even on Bitcoin, if you go back and look at a weekly level, there's some pretty strong support levels. And there's also patterns of, if you look at from 2015 to 2017, Bitcoin increased like you said, 7,000%, and then it dropped 90%. And then it made another 7,000% gain. And then now it's dropping another 90% again. So if you just look at those patterns and you don't even really get caught up into what it is or whatnot, you just trade those patterns,
This is the full history that I can bring up.
You just let it work. Yeah, you can see it's kind of pushing. It has a support level around 13,000. and just see what happens with it. Let the
Yeah, I wouldn't
pattern
put up.
play
I
out.
wouldn't. Yeah, I wouldn't put up 17 grand for a Bitcoin, but I might throw $6 at a digital trust like those stocks.
Ethereum, yeah.
Yeah.
But just
$6
play your
sounds
risk.
yes,
If you
yeah.
put in 17,000 and you put a stop loss of a couple $100, you could make some money on it, just like
Yeah.
any trade.
Yeah, no doubt about it. All right, let's not kill any more time here. Let's get to everybody here. Casey, just re-explain how people can get a hold of you. And if you have any special offers, this is a great time to extend them.
Yeah, so you can get hold of me by looking for me at the How to Trade It podcast, which is at tradingstrategyguides.com. And I just recommend subscribing to the podcast and listening, because it's really cool to be able to learn from people that are really smart, that have made money. People that are listening to the show are learning cash flow strategies and trading strategies, and it's just a great education. People are really enjoying it.
Okay, that's great. And Leslie, again, how people can get a hold of you and any offers you'd like to extend?
Well, my website is Trading Live Online, and I think David just put that in. Thank you. I am just getting some emails together. I'm going to be doing a all course bundle. If you go to my website, you'll be able to see the courses. I'm going to be bundling all of the courses together, and then I'm going to be extending the learning with this out until June of next year by doing follow-up trading classes. So everybody has a chance to study the materials, and then we'll go through with live charts, answer questions. But I'm going to be covering everything of building your technical analysis skills. If you use charts, you have to have strong technical analysis skills. That's trading is not just the skill by itself. It's one skill within many, many skills that are needed to be able to trade efficiently. I'll be teaching some pattern recognition, showing you how to create simple trade plans. I'm going to be addressing the emotions in trading and give you ways to deal with those. And I'm going to be showing you how to identify what I call hidden losses that have huge impacts on your bottom line. We're just going to be going over everything from beginning to end. So if you want to be on my email list, just hop on over to my website, Trading Live Online, and just go up to, I think it's the contact, or down to the bottom, and you can subscribe to my email list, and then you'll receive the emails that should be coming out shortly.
Sounds great. And Dan, again, how do people get a hold of you? And then, of course, any offers you'd like to extend?
Sure. We would love to hear from you at markettaker.com, 2 T's in a row, markettaker.com. And for newer option traders, especially, we actually have a webinar series coming up all on covered calls, and you can register for that by going to markettaker.com/REG, as in for register.
Sounds great. And as far as Option Professor is concerned, if you go to optionprofessor.com and put in your information, I am having one-on-one educational sessions, 1 hour, education sessions, where I share my opinions and my views on things that you're looking at, and I share things that I'm looking at for 2023. And that'll be only happening for the next couple of weeks, because after 2 weeks, I'm going to be going to Turks and Caicos, and I won't be doing any of this stuff for a little while. So if you're interested, go to the website. Hey, you guys, thanks, Casey. Thanks, Leslie. Thanks, Dan. I think we offered a lot of information here that hopefully will be helpful to the listeners. And thanks for being here, you guys. I'm going to take it back over to David now.
And thank you. Have
Thank you.
happy holidays, everyone.
Thanks, everyone.
Yeah,
Bye.
a lot of good info. That hour went by quick. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or your favorite podcast app. And you can also just go to TimingResearch.com to get the recordings that way as well. The recording of this show will be there as soon as I can get it posted. Also, all of the past shows and events are permanently there as well. And just want to thank my guests again for today. Casey Stubbs of TradingStrategyGuides.com, Leslie Jouflas of TradingLiveOnline.com, Dan Passarelli of MarketTaker.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.